Hi, my name is Shawn Brubaker.
And I'm Christine Sobolewski.
And we're with Gift CPAs. Many of our clients have been asking us questions about the Tax Cuts and Jobs Act, which was enacted in December of 2017. So what we're going to do is go over some of the most often asked questions and some of the items that are going to affect the most taxpayers.
So Shawn, what are the changes to the tax rates, the personal exemptions, and the standard deductions?
Well, in 2017, there were 7 individual rates, and they ranged from a low of 10% to a high of 39.6%. So for 2018 and going forward, there are still 7 rates, but they range from a low of 10% and a high of 37%. Now that rate does not include the net investment income tax rate of 3.8%. That has not changed.
The capital gains rates have been retained at 0, 15, and 20%, but the income ranges were modified.
Personal exemptions have been suspended, and the standard deduction has increased. $24,000 for married filing joint, $18,000 for head of household, and $12,000 for all others. Christine, what are some of the changes to the itemized deductions?
The miscellaneous itemized deductions have been suspended for federal income tax purposes. This includes your unreimbursed business expenses, your tax preparation fees, your investment expenses. But it is important to note that your unreimbursed expenses are still deductible subject to the laws of Pennsylvania and your local taxing agency.
The deductions for state and local taxes, often referred to as SALT, which also includes real estate taxes, have been capped at a maximum of $10,000. Deductions for mortgage interest are limited to interest paid on up to $750,000 of new acquisition debt on a primary or second residence for debt incurred after December 14, 2017. There is no deduction for line of credit interest unless it is considered home acquisition or home improvement debt. So what are some of the changes that were made to the child tax credit?
The credit is increased to $2,000 per qualifying child under age 17, with an increase to the income level phase-outs. The phase-out begins at $400,000 for married filing jointly and $200,000 for all others. The refundable portion of this credit is $1,400. There is also now a $500 non-refundable credit for certain non-child dependents. An example would be an elderly parent that you care for or a disabled adult child. There were also some significant changes to the business taxes and deductions that we're getting a number of questions on. Shawn, what are the new rules regarding meals and entertainment expenses?
So, for expenses incurred after December 31st, 2017, there is no longer a deduction for entertainment expense. So what this means is if you normally took clients out for golf, or you took clients or employees to, let's say, a Harrisburg Senators game, those expenses are no longer deductible. Taxpayers may still generally deduct 50% of meals. So this includes an employee that might be traveling for work, or if you're taking a client out or a potential client out for lunch, that meal would still be deductible at 50%, so long as it's in the normal course of business. So before December 31st, 2017, if an employer provided meals on premises for their convenience, those meals were 100% deductible if they were provided to employees. So after December 31st, 2017, that's no longer the case. Now they are limited to a 50% deduction. Are there any other business deductions that have been changed?
As a matter of fact, yes. The domestic production activities deduction has been repealed. There are also a few changes to the depreciation rules. Bonus depreciation can now be taken on used equipment and is increased to 100% for property placed in service after September 27, 2017.
So qualified improvement property is also now eligible for bonus depreciation. Qualified improvement is any improvement to an interior portion of a non-resident building if the improvement is placed in service after the date the building was first placed in service. The maximum allowed under Section 179 expense is now $1 million, and the phase-out for that is $2.5 million. So as long as you have not purchased more than $2.5 million of assets, any assets placed in service up to $1 million will be deductible. So what else should small business owners be aware of?
The Section 1031 like-kind exchange is no longer available with the exception of real property exchanges.
And for net operating losses arising after December 31st, 2017, the 2-year carryback has been suspended. For losses arising in tax years beginning after December 31st, 2017, the NOL deduction is generally limited to 80% of taxable income and can be carried forward indefinitely.
The deduction for business losses on individual returns is now capped. Trade or business losses exceeding $500,000 for couples or $250,000 for singles is non-deductible, but the excess can be carried forward.
The tax rates for C corporations have also changed. In 2017, they ranged from a low of 15% to a high of 35%. For 2018 and moving forward, there is just one flat rate of 21%. And what do you think the biggest change regarding small business has been?
I think that would be the new deduction for 20% of qualified business income from a pass-through entity or sole proprietorship. This deduction is capped at the greater of 50% of the individual's allocable share of W-2 wages deducted by the business, or 25% of the individual's allocable share of W-2 wages, plus their share of 2.5% of the unadjusted basis of property used in the business.
There are additional limitations if the business income is derived from a trade or business involving the performance of services in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, brokerage services, or any trade or business where the principal asset of such trade or business is the reputation or skill of one or more of its employees.
So this new deduction for the 20% of qualified business income is sort of complex. There's a lot of moving parts, a lot of limitations, things like that. So if you think that this might apply to you, it's really best just to contact your CPA for more information.
So once again, my name is Shawn Brubaker.
And I'm Christine Sobolewski.
And we're with Gift CPAs. If you have any questions in regards to the information that we provided today, please feel free to give us a call. Thank you.